rolling. Everybody here, welcome to Forex.Today, the YouTube channel for foreign exchange traders. There are 13,000 of us gather as a community to align our satellites every single day. Super happy to have you. Make sure you treat everyone with respect in the chat. Treat them with dignity. If you're a hater, if you're a spammer, go find someone else's YouTube channel. Today we're going to cover the crazy weekly jobless claims. Let's see if we go from 22 million people that have lost their jobs to worse than 22 million. Or maybe, just maybe, there's going to be a change in the trend, which would be a very good news, right? So anyways, it should be a very interesting day. I'd like to take the opportunity to thank Traders Way for being the sponsor of our channel. Thank you, Traders Way. They're a boutique foreign exchange trading firm that would like to earn your love, your loyalty, your respect. And they do so by investing into your trading education here now up front. These webinars are helpful to you if they're entertaining, if they help you build skills like patience and discipline, technical or fundamental analysis. Please show it back by visiting tradersway.com, opening up a demo account, download MT4, play some trades. You'll check out the fast execution speed, the narrow spreads, and the amazing swaps. If you ever need it, world-class customer service with white glove treatment. Roll out the red carpet for you, because you're special. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Thank you, Traders Way. Thank you. So, everybody's here. If you're new, please click subscribe. If you've been around a while, that's cool too. But please let YouTube know this is quality content. All you have to do is click the like button. It's not a big deal, dude. Your mother would be very disappointed if you didn't click the like button. She didn't raise somebody like that. So make sure you take that opportunity. And if you could, if you're watching a recording of this, so now I'm talking to you in the future for me, it'd be the current for you, but I'm talking out into the future for me, and I'm like, hey, you, if you're watching a recording, please document that by leaving a comment. Just something you liked, something you learned, that kind of thing. Leave a comment. All right, cool. Cool. So we got weekly jobless claims. Yeah, boy. So that's cool, right? We got a good day. Should be some interesting news, some volatility. I don't really do the event-driven scalp very much anymore. Back in the day, a news event like non-farm payrolls would move 300 pips in the first 15 minutes. Now it moves 50 pips, maybe less, in the course of 4 hours, right? But still, today should be interesting. Mostly fundamental, right? So several weeks ago, about 3 weeks ago, it was clearly risk off, and then it was clearly risk on, and then there's been a couple of weeks, a week and a half to 2 weeks of just sideways. Bulls buying at the bottom, bears selling at the top, and that kind of makes sense. And of course, amateurs losing money in the middle. All of that kind of makes sense. Hopefully, we'll see maybe a bottom printed, like with the bottom of like the bad economic data, the bad jobless claims, but probably not this week. Just to let you know, I live in the wonderful state of Georgia. And they're opening things up tomorrow, so my wife and I are going clubbing. Whoop, whoop. I went and found the glow sticks. They were all dusty. Also, tattoo parlors are opening tomorrow here in Georgia, so I thought I'd get yet another tattoo. I was thinking something in Sanskrit right here. I think that might be cool. So, yeah. So, big day, right? Big day, so we'll see. I don't know about restaurants. I think restaurants are open. Some things are not quite open, all that kind of stuff. So, it's going to be fantastic, right? I'm so happy, I think I'll let the hitchhiker go. I said, get out of here, gimp. All right, Aussie strong, Euro weak, CAD strong, Yen strong, Pound strong, Kiwi strong, Swissy weak? What? So we'll have to take a look at that. That's an odd one. That's why I was looking at Swissy Yen just, I don't know, an hour ago. And I'm like, wow, that's weird. So that's weird. Dollar strong, that's cool. Yen strong, that's cool. That's risk off. But then Kiwi and CAD and Aussie are all strong, but those are commodity plays. So That's risk on. So risk off, risk on. Wow. Strange. Okay? Very strange. It's just strange. Weird. It's kind of weird. So be careful, right? Be careful. That's all I'm saying. Be careful. So when the live trading group met yesterday, the swing/day trading group, it was day trading yesterday. So the day trading group and I met yesterday, and the way I went on that was risk off, and it hasn't really worked out for me. It hasn't not worked out for me, but it hasn't worked out. So it kind of just stuck where we were on some of these things. Wait, I think we were all on yens. So we'll come back to this in a bit. I think we were here, pivots yen. So I'm short at the pivot, I'm short at the pivot, I'm short at a pivot, and oh, this one's not. So it's already turning risk on right as we go into this, and that sucks for me. So I'm probably going to get knocked out of this one. This one, I think I have 33 pips as a stop, and I have 99 pips. I got 99 problems, but a pip ain't one. Okay, so top. Barry, I get probably looks like 100 messages since the last time you posted. So whatever you said, I'm sorry, dude. Right. So if it's important, leave one of these, whatever those things are called, where you pay $1, post your question. All right. Let us be going now. So anyway, so I'm kind of stuck in some trades. This one ain't going to work. So I'm going to lose 33 pips here. Wah, wah, wah. This is starting to bump up right off my entry, which is 76. But I came up from below, and that's not working out. So, how long until the news? 10 or 11 minutes. So anyways, super chat. Thank you, Anthony. So pay $3 if you want to know if I cook. All right. Let us move over to the dollar, see how we are. It's like, hey, do you like apples? Well, how do you like them apples? Barry did it. All right, Barry. Yes, you're supposed to post the question in there too. But thank you. Oh, €1? Yes, Barry, I do like to cook. It's a passion of mine. All right. That is pretty funny though, Barry. Good Rico. All right. Yeah, boy. Yeah, that's pretty funny. Oh, is it a pound? Sorry, I don't have my glasses on. Yeah, well, even better. Yeah, why don't you tell them, Prince? I agree with you. Okay. So, cool, right? That's what we planned out yesterday. It's mediocre. I know we all discussed it, and a bull's going to try to do it down here. But if you were going to put together a plan, it would be down here to here. And we had this as a, I guess you couldn't really call it an out of position trade, but this is a counter trend trade, and then sort of the best expected potential. Not full potential, but best expected potential would be central pivot, and then we have this as support. So I think what we talked about yesterday in the day trading group was, this is in play now as a counter trend. And if a bull was going to come back in, they're going to play it like this. Okay? So if you're a bear, you sell at the top of the range. If you're a bull, you buy at the bottom of the range. Easy peasy lemon squeezy. Okay, and of course, amateur traders get caught in the middle, and they're very inconsistent. All right, yeah. Thank you, Carlito. Benny Bronco. Thank you, Benny Bronco. From the Bronx. We'll bring up Axel Steel, I guess. Yeah, I just didn't have time to eat and stuff. I'm running hard, running fast for you guys. I typically, you know, being a former exotic dancer, I would never eat a bagel. All right, so we'll get this ready to go. I'll move that over there. You guys happy? How you doing as far as COVID? Everyone healthy? Everyone safe? Hope so. Okay. So anyways, this trade here represents risk on. This trade here represents a rebound in oil. I'll show you just quickly. One of the things we also covered yesterday was a move in the Turkish lira. Which also kind of represents potential risk on. So let me bring that up. Look at this Euro Turkish lira. Wow. Wow, huh? Beautiful little roll reversal. Na 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 na. Awesome. Who would have thought, huh? So mark your lines. I'm going to include that bottom, but also this top. By the way, we're going to do a conference in Cuba 2021. We don't have any internet while we're there. So I think we'll do our mastermind group in Havana. What do you guys think? I'll teach you how to fundraise, raise money, do pitch decks, review your disclosure documents, review your history, branding, legal, what it's like to go through regulatory compliance, what it's like to go through audits, what it's like to pass all your tests. We should do that. That I just want to write off rum and cigars as a tax write-off, as a business expense. 2021 made a... Okay. So that's what it would look like here. Kind of mad I missed it. I mean, it's an obvious place to sell, but it doesn't always fall. That's the thing. Like, you look at it, it's obvious, and it is obvious. But in the previous few months, it didn't fall. And I think what I said a couple of days ago is I was thinking the actual opportunity would happen around 8.0, which I really have to go out for. I can't even get it on the screen. So I guess what I was thinking is one last hurrah up to 8.0, and then we dump it, right? There's 7.9 is the top of next month. So I thought this would go a little higher, and then this would push this up to 8, and we'd be doing, I keep watching the time, by the way. And I thought we would have, let's say, a higher high this month, which would raise this pivot up to here, which would be 8.0 psych level. And that's the one I thought we would trade. So to put this together, I a target up here like 7.725 for this week, and then a dipsy do, and then an 8.0 for an early top in May, so around May 10th. I figured we'd be tickling 8.0, and then I would be looking to drop this and be short forever. Forever, like literally. Put it in my will. Okay. Let me just double check. So that's what I thought. And so maybe I'm kind of right. Maybe this is down to the future 21 and then up and then down and then up and then a double top and drop. So I'm kind of caught here because I see it falling and I'm hungry. I'm hungry to sell it. But I still had been planning a higher high before the low. Okay? Chris, it's a great plan. Oh yeah, guys, links to the swing trading group is in the description below. But right now, during the COVID-19 lockdown, I'm doing day trading and swing trading. So right now, until June 1st, not only am I meeting with you every Thursday, like today, to do swing trading, I'm actually meeting with you every single day. Sunday, Monday, Tuesday, Wednesday, Thursday. Okay? I'm meeting with you Sunday through Thursday to plan day trades. So we always plan our day trades somewhere between 5 and 12 hours in advance, and our swing trades somewhere between 24 and 72 hours in advance. Also in the description below, there's a link to my training videos, and they're 80% off, almost 80% off. Right now, again, because of COVID. So I would rather you be binge watching Forex videos than Tiger King or whatever people watch. Okay. Looks like Societe Generale lost $200 million last month. That's what you do. You got no stop losses? Amazing. If I haven't responded, Olin, you have to send it again. I get hundreds of emails a day, and so I can't read them all. I try to, but I can't keep up. If it's because you can't install your files or something on MT4, I'm going to have to reorganize things. People, I guess newer people that are less experienced with MT4, they're doing things like throwing folders into folders instead of pulling the files into folders. And so I'm going to have to make an even, let's say, more basic one. Like, you can't throw a folder into a folder if you're trying to pull the file. So you're going to have to pull the files into the folder. So I think I'm going to have to redesign how you download the folders and stuff. And so I'm going to have to work on how to make it as easy as possible. I might even just pay a programmer to build a program that just installs it for you. Maybe that's even the easier thing. But then people won't know how to do that. So I don't know. So I'll have to work on it. I can see how it needs to be easier, so I'm going to work on that. I will make it easy. Okay, I think we're getting here.
This is Bloomberg Daybreak. I'm Alex Steele. We're just about a few seconds away from the latest read on initial jobless claims. So quick check here on the markets. Not a lot of action happening.
It's in MetaTraders, David. Straight up in MetaTraders.
Report. Switch up the board. Just some things I want to highlight here. So euro dollar, one of the underperformers in the G10 space as we wait for anything from the EU leader summit. I also wanted to highlight, though, the movement into the bond market in Europe. Here in the U.S., we're not really seeing that much, but we are seeing some buying of peripheral debt as the ECB will use it as
right on, Ariel. Awesome to hear that.
Okay, initial jobless claims dropping right now. 4.4 million from last week. So 4.4 million people.
4.4.
For about 26 million over the last 4 weeks. So just
26.5 million people have lost jobs.
Continuing claims less than
Thank you, Alex Steele.
Economic and policy correspondent Michael McKee, as well as Greg Peters, PGIM Fixed Income Head of Multi-Sector and Strategy. Hey, Mike, walk us through just sort of any nuances we need to know for initial jobless claims. As we've been talking about all morning, we know these are going to be bad.
Well, we knew they were going to be bad, but most of the pig is through the python now, if you can say that about 4.5 million people claiming jobless benefits.
So yeah, anyways,
Saw a big, obviously, rush in the first.
so it's a slowdown in job loss, but it's still
Where things are
negative, right?
and Americans are getting their applications in. States are clearing some backlogs, but still, 4,427,000 is a lot of jobless claims. It would have been a head shaker if we hadn't had the previous weeks of 7 millions. We're looking at continuing claims starting.
So that's going to be probably positive, which means all my risk off trades are going to be knocked out. Okay, that one knocked me out. This one I'm actually making money on. So this is actually a Kiwi move, which is interesting. So this is about the same, a little bit negative. Remember, I'm short at 76. We're at 76.8 or something. So I'm like negative 10 pips here. And this one I'm probably positive 5. So I'm still kind of neutral, although I lost 33 on this. But I'll take a 33.99 like that every day of the week. So like if you can notice, this is a step down. So in this scenario, I will do this every time. Remember, I can do this 66% of the time, be wrong, and not lose money. All right, so not a big response. I'm surprised it's not like hardcore risk on.
The equity markets are telling you we're in a V-shaped recovery, but the data is just seeming to begin to trough here when it comes to, say, jobless claims.
Yeah, it's a very interesting time. What I think the data that's currently coming out is, quite frankly, meaningless. And as a consequence, as an investor, you almost have a free pass in that what markets and everyone's really trying to determine is, what does a reopening look like and what's the consequences of that reopening on the economy. And my belief is that the equity market is pricing in a very aggressive, positive reopening, where I think the credit markets and bond market is much more kind of measured.
Yeah, the smart money is still worried.
Investors are very much in
All right, so Kiwi strong though, huh?
opportunity where the data is meaningless.
So that Kiwi Swissy must be Oscar Mike.
Could be a more dangerous path going forward.
Yeah, Greg, it seems to me that you want to ignore the data to an extent because there's no way to contextualize.
Sander, talk to your bartender, your therapist, or your priest.
How quickly we see the data improve so that you can get some sort of context from where we were when we started going down.
But I'm not going to offer a solution for you. I'm not your financial advisor. All right, let's do this. I'm going to put this up.
That is precisely right.
Actually, I didn't mean to do that. Hang on.
What industries and sectors are most affected is the easy part. It's clearly retail, it's clearly leisure, and other types of highly cyclical sectors. But then what does the rebound look like? What an interesting aspect here.
So this is,
What typically drives
so it's an S1R1.
whether in the broader economy.
So based on technical analysis, I would get concerned right around here. That doesn't give you much upside anymore. So I guess if you weren't long this 10 hours ago, then you don't deserve it and you should let it go. Not your fault. Don't worry about it. I don't know why Kiwi is that strong. Maybe there's Kiwi related news.
Than many are expecting.
Part of the rhetoric, at least in the equity market, is you basically have the Fed and all they're doing versus profits. Like, don't look at profits, don't worry about it, because look at what the government, the Fed's up to. Do you think that the amount of money that the government
Look at the
is
pig,
spending,
man.
what the Fed is doing to help, is that enough?
This reminds me of the lesson I gave a couple of days ago of expect a big pullback.
It's really quite astounding.
Yeah,
The size
it's even higher than I thought. I believe I put this line here like at least to 1.2000.
government has really been not only here,
Wow, that's how it goes.
I think it's one of
Been through this before.
No, I mean it helps on the margin. It helps contain the downside, if you would, but it doesn't necessarily produce
Okay, let's do gold, oil, and Bitcoin. Are you guys okay with that?
all this government
Gold!
action in terms of upside, and I think it's more about cutting off the tail, which is important, but not nearly as important.
Well, the problem is the pound looks reasonably strong. The yen looks reasonably strong. That means nothing happened. All right, cool. So let's look at gold. Gold.
OECD came out with a report today that said around the world in the 30
M2 bottom predicts an M4 top. That gets us up to the monthly as well. This predicts a MR2. This predicts a WM4. So this isn't R2, but it's close. So this is the conservative target for the week and for the month. Okay, so the conservative target for gold as a high is 176.725. Okay? If you're more aggressive than that and you say, well, gold has a little more legs than that, you're going to take it north, then we talked about this 3 weeks ago. The target is 18-ish. Okay, 18-ish. Could go a little higher than that. Like the actual number is 1829. So let's put 1825. Okay. And the conservative one is 1775 to dumb it down a little bit. I would just split the difference and say, give me 18. I understand how that's psychologically important. Okay. So if you're very aggressive as a bull, this is how you're looking at the market. And this would be your exit. Okay. Now remember, the value is knowing when to exit and actually doing it. Any idiot can buy. Buying's easy. If the trend takes you in the right direction, it's easy. Having the discipline to get out is much more difficult.
You want to be defensive, but there's been such a thrashing of valuations somewhat indiscriminately across.
All right, I have to pause this guy. He sounds like he doesn't know what he's talking about. All right. Somewhat indiscriminately, he's just saying, like, I don't know why. I don't know why. It seems to be very indiscriminate because I don't know why. And you're like, nope, it's not indiscriminate. Someone else knows why. Think about it. When you're talking about the stock market, someone else is getting out of something because they know something. And they're like, I got to get out of this. Or someone's getting into something because they know something. They're like, I got to get into this. When you say it seems to be moving indiscriminately, you're just saying, like, I don't know why she swallowed a fly. Perhaps she'll die. Perhaps she won't die. I don't really know. Sometimes that's the right thing to do, but I suppose you're on Bloomberg because you're supposed to know something. Sounds like he didn't prepare. That's all. Happens too often. I wonder if he plans well. I mean, I remember one time I was speaking at a conference in Dubai, and there's some guy on stage, an older guy, a guy that wears a bow tie, not the Bloomberg guy, some other guy, and he worked for a broker, and he spoke with a British accent, and he was up on the stage, and all he had was notes written on 5x8 cards or whatever they're called. And he was up on stage for an hour, and he'd look down and then babble, 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 babble. Then he'd look down and babble, babble, babble. And he has no slides, no nothing. And I thought, you know what? This is insulting to everybody. Like, you might as well have just called in sick. And then, so I was there because I was the next speaker. And so he was done babbling. Everyone's like, thank you, white dude. Thank you for not preparing. And then, so he gets off stage, and then they're like, you know, and the greatest trader in the world, Wayne McDonald. And they all stand up, and they're like, yeah, Wayne. And I go on stage, woohoo. And I'm like, no, thank you. Oh, you're far too kind. Everyone sit down. And then I said, okay, I got 60 minutes, and I have 87 slides, so I got to go. Boom. And the funny thing is, I get to the very end, I'm like, and that concludes my presentation. Thank you very much. And I was down to like literally 15 seconds or something. Like just timed it. It was great. 87 slides in 60 minutes. And people are like, this guy is totally prepared. So this guy sounds like, well, I don't really know what's going on. All right, so that's gold. Let's do oil. Oil. Hey, Johnny. Maybe you were there, the Forex Trading Expo 2007 or 2008 or 2010. Okay. Okay. This is spot West Texas Intermediate crude. Okay. Great. This line was drawn last month. Okay. Isn't that cool? Okay. Isn't that cool? All right. So Ezek says, yeah. No, you didn't have to. Yeah, well, I guess so. Timed him out. Yeah. Yeah, I guess I'm a noob. Anyways, my point is I was prepared. That's all that matters. Okay. So bottom, but this line was based on the range that March did. So at the very first day of the month, which was like way up here, we had this line drawn. Now, we had a crazy move with oil, right? Oil went to negative $35 a barrel on what, May futures contract? Like, it's just strange. And I thought, like, literally impossible. Okay? But isn't it neat that after this man-made disaster, that's what this oil prices dropping is not COVID. Okay? This is a man-made disaster. And even with that in play, isn't it just absolutely fascinating that based on what happened last month, we have an algorithm just paints colors. And we're looking at a weighted mean average, a weighted mean, a deviation, and a deviation from the mean. And then we add 2 standard deviations from the mean, 2 standard deviations from the mean, and then we add midpoints. And then we say there are certain midpoints that have more weight than others. Okay? So this is the central pivot. Okay? This is 1 standard deviation from the mean. We call that support 1. We have this as 1 standard deviation from the mean, so this is support 2. And then we say we should look at the midpoint between S1 and S2, we'll emphasize that. And the same thing is to the upside. And then we say this black line we call the M1, and we call that the conservative bottom in a bearish market. Okay? The standard operating procedure. It's in my book from 13 years ago, right? So this is an algorithm, which means we just look at last month, we put it all together. And then with this crazy, unpredictable, man-made financial disaster, this black line, which we say should be the conservative bottom in a bearish market, becomes exactly the bottom. Based on what happened way out here, way last month. 3 weeks ago, we were creating this price. Isn't that interesting? I think it's incredibly interesting. So what does it mean? Well, I believe it means professional energy traders use monthly pivot points. Look at it, guys. It's exact. Very cool, right? Just amazing. So if you don't have the right tools, it's going to be very difficult to trade. Maybe not impossible, but I think we all agree if you're going to be a carpenter, you need the right tools. If you're going to need a plumber, you're going to need the right tools, right? And here we are. We're technical traders that you also use fundamental analysis. So you have to have the right tools. You don't have to have every tool, but you do have to have the right ones. And I think that's absolutely fascinating how important these lines are, even in a time of crisis. Look at this. This is the sell zone. This is the target if you sold here. Isn't that crazy? Amazing. Okay, amazing. Just amazing stuff. So, they're important information, and you should look into getting to know them. Okay? I don't think I said that. That's not my language, Reb. That's funny. I did say when we were at $20 a barrel, I did say it was impossible. I said we all agreed. I'm like, it's impossible. Oil can't go to zero, right? It's impossible. Now, first of all, it wouldn't be natural, is another way of looking at it. The only reason oil dropped to zero is unnatural. Humans made that happen. And there's no long-term logic to it. In fact, I think everyone, like the Americans overproduced, the Russians overproduced, Saudi Arabia intentionally overproduced. But like Iraq and Iran and Libya and Venezuela, they're all cheating too. They're overproducing. And this is not your natural supply and demand equilibrium. That's all. But I did say I had strong conviction we couldn't drop below 20. I said there was no logical reason for Saudi Arabia to drop oil below 20 because 20 was low enough. Because almost everyone in the world needs higher prices than $20 a barrel to make money. So like the Americans need $35 to $45 as a break-even price. So 20 is low enough. And Saudi Arabia is more like 13 to 15. So like they don't want to lose money either, but they want oil prices to be low enough to screw over the Americans and screw over the Russians, and because that's what it was about. It was a price war. So I thought, yeah, it's got to stay above 20. There's no rational reason to drive it below 20. And so I bought it at 25, if you remember. And what happened? I bought it at 25. What happened? I managed my risk very, 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 very well. Right? I moved my stop. I got knocked out. I had $1,000 profit. I was very upset about it and sad that maybe I moved it too quickly or something, but I was out and only made $1,000. If I would have held it like another week, I probably would have been down 15,000, negative 15,000. So I was crying because I only made $1,000. Well, that reminded me of the importance of what I do. You look at opportunities, you make the best decisions you can with the information you have, even then, you're very likely to be wrong. But that's why it's important to manage your trades without emotion. You can be emotional after you get knocked out. You're like, oh man, that was such a good trade. I got knocked out with only $1,000, right? But you don't realize that that's probably the best thing ever. So that's what happened, right? And I'm very, very lucky to have managed my trade so conservatively. And looking back, it was stupid. That was a really dumb trade. So I apologize for that. But this shows you why you need to make your own decisions. Right? Making financial decisions because some guru on YouTube, like, come on. I'm doing my best to teach you how to make your own decisions and be an independent trader. All right, so anyways, let's do some BTC. Bitcoin. Well, it's not doing anything right now. Let's drop into a smaller time frame, and I would have to say, if you happen to be a bull, because of this move here, which is a well, it's not a counter, but it did counter. Higher high, higher low. So you got to look at it this way, I think. Double bottom, then you get the higher high. We call this a 1, 2, 3 setup. 1 is the double bottom, 2 is the higher high, 3 is the roll reversal. So you got to look at it like this. Grab the old high. It used to be resistance. No, 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 no. And now it should be support. Now you're like, well, Wayne, it didn't kick off. Look, it's a guide. It's not the end all and be all. It's a guide. So wait for it to come down at least to this 68.98 price. The other thing you can also use, which gives you kind of the same thing, and it's not your text, it's your fib. There you go. So you take the high to low and you do a fib, and that gives you a buy zone that goes from about the same price as the other to the 618. So the 382 to 618 is another way of looking at it. The third way of doing it is you look at pivots. That's a bullish entry, plan A. It's less desirable. The more desirable price is the M2, which would be your plan B. So here's how you would look at it in this scenario. You could buy it off the roll reversal. You could buy it off the central pivot point. You can buy it off the M2. You could buy it off, let's say, we'll just call it the 50%. The one thing is, you know not to sell it. That's all it means. Okay? And they all lead, right? All roads lead to Rome. Let's find our Rome. Rome, if you want to. Roam around the world. Okay, and we're heading to 75. Oh, yeah. 75, oh, yeah. 75, oh, faux show. Wherever I may roam. Yeah. Anyway. That's cool, Jay. Appreciate that. Wait till I become a professor at Harvard, huh? Cool. So that's some up for Bitcoin. So to get that, you're going to need risk on. Daniel, I'll give you some homework. Because we talked about this in the day trading group last night. Go to the St. Louis Fed website. And I bet you I could spend a whole weekend on that website. Oh, why would you not sell? Okay, let's do a bear. Okay. You got a bearish point of view. All right, cool. All right, is this trending down? Not at the moment. Okay, but let's reset this. Let's reset this as a bear. Weekly bearish biased pivots. Okay. You're a little too high. Price is a little too high right now. So you don't have a good price. It is topping out on a roll reversal. So I think you're going to have to wait here before you take a shot as a bear on Bitcoin. And I'm going to need to see a lower low than this low then a lower high. So it looks like you'll probably get a trade to the downside on Monday if you're a bear. Okay, Max? Sure, baby. But well, you see that in other ways too. But yeah, that's part of it, baby. Sure. The problem with spreads right now, though, so you're talking like 10s and 2s? Or do you mean spread on the price? Wait, are you talking about bonds, baby G? You talking about yield curve? Okay, so right now the Fed is controlling the entire market. So will that tell me the market's feeling whether it's bullish or bearish? No. The Fed has told us that they are controlling the yield curve. Not just the short end of the curve, like 3 months to 1 year, let's say. But they're also buying the 2s, the 5s, 10s, and probably even some 30s. And they're going into junk. It's not quite the same, but it's similar, right? I'm just saying they're doing actions that are unusual, and they're controlling the curve. So right now, even though, let's say, 5 years ago, I could have been watching the 210 spread. Okay. TED spread. Okay. I could be watching that and it would be helpful. But right now, since the Fed is dictating, if they don't get if the market doesn't give the correct yield, then the Fed steps in and manufactures the yield. Okay? So in that scenario, it's not helpful. It's like saying oil is at zero, so COVID is destroyed the global economy. Well, COVID-19 has been horrible on the global economy, but it hasn't driven oil to zero. It might have driven it down to 30 or 35, but not zero. So it's unnatural. So therefore, it's not a good leading indicator. Because what you're looking for is the psyche of the market, but that's not the market price. When you're looking at the yield curve, or when you're looking at the price of oil, that's not the equilibrium price. That's not the price when supply and demand are balanced. So yes, demand has been hurt by an exogenous shock and price would fall. We know the model. I've done it many times. But the supply issue is unholy. Okay? Oh, Big says, hey, no interest rates changes till 2021. Well, I'm not talking about the Fed rate. I'm not talking about the prime rate. I'm not talking about the rate at the discount window. Okay? What I'm talking about is yield on treasuries. I before E except after C, so yield. Okay. Okay. Right. Cool. How you guys doing? Everyone feeling all right? Only about 38% of people have clicked like today. Would you please click like for me? Just tell YouTube that Forex.Today is quality content. Well, George, in 2021, I am going to design lectures, like courses, but like complete lectures in college style on economics, central banking, real estate, investing in the market, even venture capital. I might do a class on private equity, all that kind of stuff. So I'll probably spend 2 or 3 years documenting some of the things that I learned at Harvard and do that for you. So there'll be an opportunity where, let's just say, for less than for less than one class at Harvard, you can get yourself a Harvard education. Okay? What do you guys think of that? Would you like to take a venture capital class with me? Let's say a 12-week class on venture capital. And then how about a 24 to 36-week class on real estate? And not how to be a real estate broker. I don't want to teach you things like, don't you just love the closet space? And the light in this property is to die for. Doesn't it feel so much bigger than it really is? Jesus, Murphy, push that woman off of the balcony. You're like, yeah, you have a good point. Oh, she fell off the balcony. Gee whiz. And you have to pay her, what, 3%? Yeah. Can't you just see your kids playing in the yard? Oh my God, come on. So there's the bullish point of view. You're going to need the lower low, lower high, low if you're a bear. How much would it be for those classes? Well, let's see. If I redid, let's say, $100,000 worth of education that I've paid for, how much should I charge you? Would $80,000 be a decent price, or $60,000? I can do 70% off, only $30,000. I'll teach you everything I learned at Harvard. How about 25 if you need a real deal? So I don't know. But I plan on doing it anyways. Because one of the things I like is the idea of me reviewing what I learned. It's an important part, I think, of education, to reflect and go back. So like one of the things my family does is we print out our pictures from last year. So we just did that. In fact, we went through something like hundreds and hundreds and hundreds of photos we had printed, and we reorganized things. You're like, oh, that was such a fun day. And oh, when we went to the pumpkin patch to pick out our pumpkins for Halloween, that was so much fun. Or when we went to the corn maze, that was so much fun. Or that time we went to the mall, we had a great time on that. And then, oh, when we went to Wisconsin, or oh, when we went to Florida. Yeah, and we're going through and all these photos. It's so good, and you relive your life. And I think it is an important part, because if you remember, then it no longer happened. It's sort of like, if you don't get the concept, you should watch Coco. Okay? So I think doing something similar, like I have now completed 32 classes at Harvard. Each class, 16 weeks worth of work. And I thought I should take the opportunity to relive those and rehash them and make sure I own that in my spirit. So for example, I could do a 12-week class on oil. I could teach you how to trade oil on a chart like this, and but how about the fundamentals? And how about going through, like me teaching you how to drill for oil, what it means about upstream and downstream in the supply chain, how to frack, how to crack, And then once you know these things, I can teach you the history of oil going back to the very beginning. I can teach you about World War I and World War II, how that actually happened about oil. Then we can do things like oil markets, oil exchanges, right? And then start talking about things like price discovery, right? Exogenous demand shocks, exogenous supply shocks, how to draw all the graphs, how to plot all these things out. And then maybe in the last 2 days, how to look at an oil chart and how to pull the trigger. But we can get legit into this stuff. And if I charge less than $100,000, then you get a deal. Okay? So anyways. So let's move on. What should we do? Let's go back to yens. Yeah, see, it did pop risk on here. That makes sense to me, though. Only 4 million jobs lost is good news. So pound is so weak, this hasn't even gone up. So this one knocked me out a little bit. I'm still in this one, but I'm not loving it. But I suppose that's why we have stop losses, right? So I'm going to reaffirm my trade is not likable, not even lovable. Certainly not lovable, not even likable. But it hasn't made a higher high yet, so like I don't need to get emotional about it. Yeah, Joe, when you're done with the prize, then you got to get the quest. Yeah, it's hard. Even my dad's reading the prize, and he's loving it. He says it's super interesting in some parts, super boring in others, because it's so incredibly detailed. It's like a day-by-day re-account of the last 150 years of oil. Day by day. You're like, it's 100. Oh my God. Okay, so anyways, the interesting part here is this is not risk on. This is not risk on. This is risk on. This is trying to be risk on. This is risk on. And this is, well, it's hard to tell. All I know is Swissy is way weaker than yen. And the yen being strong is risk off, but the yen being, or the Swissy being weak is risk on. And it looks like a giant gobbledygoo. Right? When the tears begin to subside and the shadows still remain. Dollar, I guess. Looks like we're just flapping around like a fish out of water right now, waiting for direction. So USD Swiss franc, remember how weak that Swissy is? Ultimately, we don't have a clear direction on where we're going, but we have more of a clear direction now. The problem is all we did was get here, okay? So on on Sunday, if you go back to Sunday at 5 p.m. when the day trading, swing trading group got together, Sunday at 5 p.m. we were right here. I said, well, this isn't really helpful to me. This tells me down maybe or up maybe. And I said, it's 50-50 at best. So usually to make a tiebreaker, you look back in history. But then I see no lower low, no lower high, you know, and we're right here, guys. I'm like, you know what? It's not very helpful. Not very helpful at all. It looks 50-50, it looks mediocre. And so we talked about waiting a day or two. And, you know, right, wait. I said, we can wait till tomorrow at 8 a.m., right? And then you could wait till whatever. So it looks like eventually it busted out of this range and went up. And now we're in here. So I think someone might believe this is a breakout because they're only looking at this on a 15-minute chart. Okay? My concern now is if it is bullish, it needs to come down and then it needs to go up. But I think as more of a conservative trader, I'm looking at this as simply a giant range. And I think there's more than enough potential for this to occur. So I'm not convinced quite yet. Okay. Yeah, Mr. Heiveld, thank you for that. So today in the swing trading group, we're meeting at 5 p.m. Everyone in the group is bringing a trade plan based on their fundamental or long-term technical bias, aka risk on or risk off. And I'm taking everyone and throwing them into random groups of 6 or 7 people, maybe 5 or 6, right? Either 5 or 7, let's put it that way. And I'm going to put them in random small groups, and as groups, they're going to discuss their trade plans with the sort of the overriding goal of trying to create a bias on the team. And if they can create a bias on the team, they're going to come back and pitch the overall group on their trading idea. So what we're practicing is trading as a hedge fund, and these teams are portfolio management teams. So if you're a portfolio manager, you have 1 or 2 analysts, maybe one or two. You may be an associate, right? So you might have an associate and a couple of analysts, and then you as a portfolio manager are managing your stack. So anyways, the idea is if I can get you used to trading like a hedge fund, so I'm the hedge fund manager. Ultimately, I manage the whole thing. I'm Axelrod, right? Everyone else is coming together in an idea meeting, and they meet as groups, come up with trading ideas, and then they're going to pitch the whole group on what the fund should do next. How are we going to make money next week? Okay, so the whole plan for tonight is to plan out all of next week. And this is what we're doing as a group. How awesome is that? So if you're in the swing trading group, make sure you're prepared. Don't just show up. Make sure you have a well-defined bias and trade plan for next week and ready to discuss it, maybe even debate it in small groups. Yeah, boy! That's what we do. That's how we roll. So there's yesterday's trade plan, by the way. No. Okay. See how specific it is? No. Long-term technicals should work, Daniel, but it doesn't explain why, which is the problem. And then you start hearing people say, well, if you look at the annual pivots, or if you're looking at this, you know, and they're doing like these ginormous long-term technicals. I can't even fit it on here, but and they're making decisions like they're not wrong, but they might say, well, this is going to be support, okay, and this is going to be support, okay, and that is correct. But the issue is they're missing the why. And all they're saying is in the past, these were interesting levels, but they're ignoring like what was the central bank doing at this time? What were the global macroeconomic conditions that led to this? And what was the response, fiscal or monetary response to these conditions? Okay? And they're ignoring that. They're treating last year the same as this year. But I would argue last year is not the same as this year. 2017 is nothing like 2020. And that they're dumbing it down too much. And also, it's harder to kind of lead. So I often tell you, like, put it this way, one of the things I discussed last night at the very end of the day trading group, I described my year-end trade plan and how my year-end trade plan is different this year from last year. And I got very specific. That's all fundamental. That has nothing to do with the charts. I know what I want to do. I know what I'm going to do. I know how I want to do it. I have plans, very specific plans on when I'm going to do it. I just don't know what price. Oh, I did, David. It's up there. You have to click the menu. Yeah, I heard that. Both of them. My trading account back behind me moved as well. Yeah, my pleasure, Daniel. Jim, did they put it on the bottom? It's supposed to organize it in order of upload. But that's weird. I'll see. I'll try to figure out what the heck YouTube is doing. Like, why would somebody want a playlist that is like that? But anyways. What kind of returns, MQL? There's nothing wrong, Portland. Yeah, that's weird. I'll have to try to figure out what they're doing. Yeah, I'll have to look at that. That makes no sense to me, but there you go. Oh, well, that's backwards looking. I know what you're doing. I used to do something like that. And you're almost looking at it this way. You're doing it the same thing in a different way. You're doing this, but in a slightly different methodology, but you're kind of going to get the same thing. So you're looking at, was this up plus 1.8? Was this down negative 0.2? And then you're using that to create trades. The only thing is it's completely backward looking. One of the benefits of using price action and pivot points, for example, oops. So let me move this way. Let me pick something random here, Aussie dollar. Okay, let me build this chart. This is actually pretty close, just the way it is. So let me kill this, okay? And let me kill and just put, okay. If all I used was this, then all I have is a leading indicator, okay? Right? And so if all you're looking at is relative returns overnight, another measure is like volatility. Was it positive volatility? Was it negative volatility? You can get the sort of same thing, but the problem is all you're doing is looking at what happened yesterday. If you're using price action and pivot points, both of these tools are leading indicators. Okay, so for example, this combination right here, that pivot tells me we're going up, and the double bottom on that price, and then the higher high. That sets up a 1, 2, 3, all part of price action, by the way. And you would look at it like this now. You'd catch a dip back into the roll reversal and then up. Okay? And that takes you to there. Now, it doesn't, right? It's a pretty good guide. All of this now is a leading indicator. Okay? And looking at overnight activity is a little late and a little slow, and it doesn't tell you like where you're going to go in 3 or 4 days or 3 or 4 weeks. Okay? It just kind of, maybe at best, like for example, using your methodology now, you would sell here. Using a leading indicator and a bullish bias, you would buy here. And if you're still a bear, at least you know for 100% fact you would not sell there. Even though your overnight volatility play or your overnight return play would tell you, okay, it was down negative 1.3%. So you're like, okay, I'm going to sell it because it was down yesterday. Swing traders know that even if you're a bear, you cannot sell there. Cannot. Never in a million years. Why? Because you're using a leading indicator, not a lagging indicator. Okay? So how many people here in the webinar right now know for a fact, even if you're a hardcore bear that sold this and sold this and sold this, never in a million years could you sell this last move? How many people know that? That you see that and you're like, stop, walk away, not interested as a bear. Okay? So day traders and swing traders know that. Okay? But that's the leading indicator. That's the advantage of the leading indicator over the lagging indicator. You know where to expect a change in trend, and you know where to expect to get out, actually. Even though it may not always be 100% correct, you still know where in the future risk will live. Okay? Just like you would expect this to reverse, up here you would expect this to reverse. So at least in here, even though it broke higher, don't think that that's wrong. All you know is when you're up here, you need to adjust for an increase in risk. So either get out or jam your stop. But sitting around not knowing is not the right way to do it. Okay? Any questions about that? And by the way, if you're going to join the swing trading group because you want to meet with us tonight, join like immediately, because I need you to watch the training videos, and that's going to take you most of the day. Because if you show up and you don't know what's going on and you're asking basic questions, we're not going to answer it. You can't waste our time. Everyone else has done the training, so do the training. You can come in and observe and stuff, but if you don't know the basics, it's a live trading group. It's not, let me teach you the basics. I mean, come on, take the training course. So if you're going to join now and start busting out some videos and taking notes and preparing. Okay? Remember, if you don't do the work, you will fail. There's no methodology on the planet that will get you rich quick, especially if you have a pathetic work ethic. Okay? There's nothing going to save you if you don't have a ridiculous, sickening work ethic. Okay? All right. No! Well, you can be impulsive and join, just do the work. Just don't think like, oh my God, this sounds so good. Maybe if I join that, then I'll get rich quick. No, dude. Patience, discipline, work ethic. These are the things that are going to make you rich. And you'll get rich slow. Cool. Yeah, cool, Daniel. So you'll like the St. Louis Fed. I think I'm done. I don't really know what more to do, unless you guys want to ask a question. Stock market's opening in a couple of minutes. That's cool. Okay, I'll do Euro. Sure. Why not? I'm here. Do you need some time on your own? Wow, this is really messed up. All right, let's clean all this up. Do you need some time all alone? I think we have Euro Swissy, don't we? No? No, no, no. No, 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 no. No, no, no. Oh, no, 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 no. No, no, no. No, 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 no. No, 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 no. No, 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 no. No, 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 no. Da, da, da. I think I need yen in here. I can't find it though. There we go. That should be enough. Let's take a look. Yeah, boy! Euro, how low can you go? Euro, how low can you go? Once again, back is the incredible Rhyme Animal. All right. Farrakhan's a prophet that I think you ought to listen to. What he could say to you, what you ought to do, follow for now. Power to the people say, make a miracle, depump the lyrical. Yup. 90s, sorry. All right, euro, can't you see? So, euro, numerator, 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 numerator. They should all be going in the same direction, which is very nice. Don't believe the hype as an equal. Can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunk. Yep, sorry, 1990s. All right. So, euro seems to be losing value against the Aussie. Like, really? What do you think that? Cool. Down, 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 consolidate, consolidate, maybe a breakout here. Okay. You got to be careful because one of the things we've been talking about the last 2 weeks is an inside month, inside week. And you're like, well, Wayne, what's an inside week? Let me define this for you. An inside week is we stay above that line and we stay below this line. You're like, well, that's exactly what's happening. You okay? Okay. So that's the problem. It doesn't really give us direction, but right now there's a little more bearishness. And if you were into that, these pivots will adjust on Friday, and on Monday, you're probably going to do something like this maybe. I don't know. That's for you. Okay? But selling here is not good. Buying there is probably not even good as well. Wow, wow, wow. And I got Euro Aussie twice. All right, I'll have to deal with that later. Look at Noki, and you're like, what the? Okay, this bottom predicted this top. Okay, and then this bottom predicted this top. So what do you want to do next? Well, I'll probably drag this across. Maybe. Yeah, you caught that, Luis? Yeah. We did gold already, Forex Binary Consultants. Ricardo just joined the group. Right on. Well, make sure you watch the videos, specifically swing trading and day trading. So tonight we're planning our trades for next week. Okay. So you need to come prepared. Okay. Show up here. Still, I'm underwhelmed. Not ready to drop my billions. Right? All right. So that's meh. At least currently across the board, there's euro weakness, generally speaking. But it doesn't mean today or even this week are good trades. Okay. So some of you guys, you spend your whole life at the bottom of the ocean, right? You spend your whole life here and you've never seen the sun because all you're looking at is this. And the way I look at it, this is just not a good place to trade. And the market conditions are not favorable in the moment. Because I'd say we're at a support zone. So if I was going to be a bear on this because it's been bearish, which I have no problems with. Let me just get my tool a little fatter, right? I would want to see a breach below the support a retracement, and then I'll drop it like it's hot. So I look at this and I'm like, okay, if I'm a bear, I might sell it next week. And if it breaks down this week, good. I don't have to be on it. I will trade it next week and make money. That's all. I don't want the risk right now. Or if I was a bull, I'd be waiting for this rollover and I'd be planning it this way for next week, right? So being stuck here on a higher time frame, I look at it and I see mediocrity. But on a 15-minute chart, you're making all your decisions on just that. And I don't think that's enough information. Okay? That's all. So I look at that, I'm like, okay. I don't like moves that start on Thursday because I'm a swing trader, right? So I'm usually done by Thursday, not starting on Thursday. So I would look for, I'd almost just look to counter trend this. So I would, if I was just a pure price action type trader, I'd probably just be considering this, but it's not the right price either. It's too low to buy. It's too low to sell. Isn't that funny? It's too low to buy and too low to sell. So the way I look at it is this is all just mediocre, and I think things will be much better next week. Okay? And yet there's lots of people trading all this, and I hope they're doing well. I think I'll wait. Euro Kiwi has done nothing for 2 weeks. So why would I want to trade it now? Euro Swissy. Okay? It's done nothing for a week. Thursday to Thursday, nothing's happened. Okay? Why would I want to trade it now? So I will let someone else make the first move. Okay? How about this? Well, if we get some risk on, this might be an interesting place. But I think I'd wait till 21. So, not quite yet. You see, it doesn't take me long to do my work, right? So, Noki is benefiting from a positive move in oil. CAD is benefiting from a positive move in oil, right? That's cool. And I see across the board euro weakness, although yen is even weaker. So this is actually very risk on, this yen part. Euro is weak, but yen is weaker. So that's interesting. We finally are getting that risk on, which is neat. So let's go back to the market scan. By the way, 50% of people watching right now have not clicked the thumbs up button. Would you please click the thumbs up button? Well, you guys can see the yen is weak. Okay, so move it on to the next trade. Put it this way, guys. If you see yen moving and you're getting all excited, it just tells me you didn't have a bullish trade plan yesterday. This is all about what you're going to do tomorrow, not today. You're way behind if you're just looking at this as what to do now. If you see a bunch of yens moving now and you jump in to trade, it's just clear you don't have any trade plan. Okay? Okay? So that's good. That's good. These flipped. Very good. Very nice. It's about tomorrow now. Okay? It's about tomorrow now. So that's what today we're going to meet with the group and we're going to plan next week. But if you were, if in a typical day, we'd do day trading, not swing trading. In that case, you would just prepare for tomorrow. And you say, okay, good. We finally got our bull run. Okay. And so you need a dip to buy it tomorrow. So you probably buy it at 64.50. See how easy that is? Set it up for tomorrow. Don't be reactionary. You're never going to be a professional trader if all you do is react to things after professional traders have done things, which means they had a plan yesterday. It looks like most of them said weekly jobless claims won't be as bad as everybody thinks it'll be, and it'll be a risk-on moment. Okay. And that was my reaction when the news came out. I'm like, okay, that's less bad, which is good, and I would expect heavy risk-on. Okay. I don't have the charts on this platform. Sorry, Morris. Okay. Which means if you're chasing price now, don't be shocked when there is a significant pullback today and you get knocked out of your trades with hardly any profit, or you lose money. And quite frankly, you deserve it. If you're chasing price, you deserve to get your ass kicked. And maybe you'll learn something and change your evil ways. Yeah. So listen to my message. You should be planning tomorrow right now. If you're just figuring it out today, you're at least 24 hours behind where you should be. Okay? Okay. So we did exotics today. We did gold, oil, and Bitcoin. We did yens. We did dollars. We did a few Swissies. We did high yield as well. So I think we're done. Cool. So if you're in my live trading group, today is swing trading day. We will plan trades worth 100 to 300 pips for next week. You'll be able to have those plans up to 72 hours in advance. So if you're in that group, I will see you tonight at 5 p.m. Eastern Time. And it's all group work today. So remember, show up with your trade plans. I'm going to teach you how to trade like you're a portfolio manager in a hedge fund. And you're going to meet with your staff today, your analysts and your associates. And you're going to come up with trade plans to pitch to the group. Right on, huh? And if you're not in that group, I will see you tomorrow morning at 8 a.m. Eastern Time. And we'll have a wonderful Friday together. So thank you for being in the Forex.Today community. Please subscribe. My templates are in the description below. The link to my book are in the description below. The link to Trader's Way is in the description below. The link to the 80% off the training courses are in the description below. The swing trading groups in the swing description below. Did I say the chart templates? That's in the description below. So there's lots of resources there to help you. Make sure you like and subscribe. And also, if you could, I'm trying to get my FX Bootcamp channel to over 10,000 because that will unlock some features, and I might do some cool things this summer on that channel as well. So if you could visit there, there's 5,000 videos. No, 4,000 videos on that channel. And there's some free training courses that are like 3 or 4 hours long. You can get those as well. So if you could do that, visit youtube.com/fxbootcamp and subscribe. I need about 600 more people to subscribe, and then some new features that get unlocked. So please help me do that. I haven't focused on the channel in 5 or 6 years. So imagine that 6 years ago, I had 4,000 videos on that channel. 6 years ago. Wow, huh? Cool. So peace on earth. May the pips be with you. May our profits be above average. I wish you the best. Please stay healthy. Please stay safe. I'm thinking about you and your family. I hope everything is well.